Good morning, good morning. How are we all doing today? Wow, already got our first trade through on the software. So I was thinking about one of the questions I got asked yesterday during the Q&A, if I still use the MAs, the moving averages, the EMAs, the SMAs, and really from a swing trading perspective, obviously I built the probability chart for the day trading, but for the swing trades, I don't really have any way to actually manage those positions. I may or may not pull up a 4-hour and throw some MAs on there and kind of see what it looks like, what the chart looks like, and if there's a setup there or not, just based off of, the software and what we get through on there. So is that we've got a long bias here on SPY. So just about a 42% win rate, long bias on SPY. Again, that's over the last month. So essentially, you would have done better if you were looking at trading in the direction of the overall market or trading with the trend, right? Especially trading with SPY, you would have been better siding on a long bias. So you can see 42%. So NVO is down 4%. 2 orders through so far. We've got some BUD calls. These are out pretty far, 12.19.25, 217 DTE. We've got the 67.50 calls. Trade, and then our first order off the open there. I mean, really after 11, volume started to die down a lot. We only had about 16 orders come through after 11 o'clock, which isn't typical, but the trend this week has been kind of a lower volume after 11:30 as far as opportunities on the software. Normally we'll see a pretty consistent amount of volume throughout the day. Average this year has been just over 100 orders. So that was kind of interesting to see that this week there's been just less trading activity overall in the afternoon. I mean, any of these could have presented opportunity. Again, it just depends on how you're actually going to go about managing that trade itself. So what I want to do is essentially go through the orders as they come through. We'll look at the swing trade specifically. I'll pull up the chart. I'll kind of break it down. We'll do a little TA, little technical analysis, and see if there's potentially a setup there or anything that I can see from a technical perspective as far as those 3 moving averages go. See if there's anything that I could potentially enter. A very, very hard bounce off of that low at 44.34. which is just the result of the overall market. Obviously, the S&P 500 recovering off of this year's lows. The market was down about 18% and fully recovered in a month and a half, which was the fastest recovery since 1982. So we're gonna see that on other stocks that we look at, right? Most stocks are gonna mirror the overall market, especially the S&P 500. So expiration date, we're gonna look at the strike price, and then we're gonna look at the cost basis. We can also, again, you have to know what the actual share price of the stock is to reference the strike. So spot and strike kind of go hand in hand, and then expiration and DTE go hand in hand. So these you're gonna look at together. Spot and strike you're gonna look at together, and then the cost basis is gonna be the 3rd variable. So we have those 3 variables. We want to look at cost first. Okay, what is the size here? 126,000. That's on the lower end. DTE 35 days out, 6/20/25. We're talking, over a month out as far as the expiration date goes. So those are going to be relatively conservative. Not necessarily conservative because we're trading options, but they're further out contracts. They're not 1, 2, 3, or 4 DTE. And then next you're going to want to look at the strike, which is 56. You're going to look at the spot. Obviously with options, we've got in the money, out of the money. If the spot was 55.01, so 55.01 per share when that order came in on KBE, and the strike is 56, these are going to be slightly in the money. These are going to be in the money contracts. In the money contracts, a little over a month out with low cost size. I see that there's not a huge amount of certainty here. There's not a ton of risk behind this order overall. It's not giving me, an overwhelming sense of bias, which is what I want to see. If we're seeing that there's a lot of bias, very high cost, very, very close expiration date, while at the same time the contracts are really far out of the money, that's going to show the most bias, the most certainty, the most risk. And then we could kind of use certainty and risk kind of paired hand in hand. You can see if there's a lot of risk behind that order with a really strong bias behind that position, a lot of cost, close expiration, far out of the money, someone's very certain, they're putting on that risk, and that is going to give me, again, more confidence if I was going to go look at taking the trade myself and then kind of breaking down that chart again from a swing or a day perspective. It is 3:45. We've got 15 minutes here. Still gonna be in these two positions that I got in this morning, and I think I'm gonna end up swinging those through the night. Right here. That was a pretty good hit. This is like my first actual game of golf back since last summer. So for hole one, we drove like half the green. That's not bad. It's gotta be the worst thing ever in golf when someone is like playing right behind you and they like pack everyone in so tight. And today, it's just one of the nicest days this spring. And I think everyone's lined up 10 minutes apart. I don't know if that's normal or what, but it seems like we are just having to outrun people and we're getting hit on the whole time. If you're wondering whether or not I could trade on my phone, the answer is yes. But sometimes I just like doing things on my computer. And right now I'm kind of just working my way through the orders that have hit the software so far this afternoon. And there are a couple trades that look pretty good that I may or may not, will decide, you know, whether we want to enter those and swing those into tomorrow's session. But the market is going to be very green, it looks like, heading toward the close this afternoon. I wish I had one of those little like tools to get the actual yardage, but that was pretty far. Oh, it was so close. I probably spend at least an hour a day. Just like, it's a habit now. How some people go on Instagram and scroll. I open Discord and I go right to the mentorship group Discord server with all the traders that I work with, and I just start answering questions. Like anytime I have a spare minute, I'll just go ahead and I'll answer some questions. And everyone always asks me like, do you have people that help you? Is it really you? And yes, it's actually really me answering all the questions in the Discord. So let's say we want to trade Tesla. If you're looking for a really simple strategy, you're just going to go ahead and you're going to apply the simple moving average. This is just an SMA. Now, within the length, you want to adjust that to a 15-day SMA. You're going to click apply and click OK. If we look at this chart on Tesla on a 5-minute, 5-day time frame, we're going to have that 15-day SMA. That's that blue line right there. Typically, a stock will trade on top of those candlesticks throughout the day's session. So typically, price will come back to that 15-day EMA multiple times during the day. It's what I like to think of as kind of a neutral zone or a neutral area where price will like to come back into during sessions. And that will help you decide then where you want to set yourself from a biased position to the long, upside, downside, or obviously like short side, depending on which direction you want to trade. But the 15-day is going to be like a neutral, again, a neutral ground, or like a magnet that candlesticks are going to trade back into and trade around. Now, one thing with trading that you have to realize is that it's a probabilities game. Any strategy, in theory, will work based off the probability of how many times you win and how many times you lose. And when you win, how big are your winners? And when you lose, how big are your losers? So you use that formula, which is just win rate and risk to reward. And like I said, in theory, any strategy could be a profitable strategy just based off of the probability behind that system and however you trade.